like to secure your retirement and enjoy peace of mind, at least in your old age? How about starting to travel, buy a cottage, move to the countryside or add to your pension? I hope you are not looking for a solution on the internet. If you have a little extra money left over after deducting your income and expenses, I addressed this in a previous video with Matt. You are one step away from being significantly better off in retirement. In today's episode, we'll look at investing in ETFs, which have been enjoying a lot of interest from retail investors lately. People like me or you. Investing in ETFs will bring you simplicity, much like buying a stock, but more importantly, broad diversification that you would struggle to achieve by investing in individual stocks. Hi, I'm Jiří and welcome to my YouTube channel. Please click subscribe if you enjoy my videos, and here we go. Well-known investors like Warren Buffett and Ray Dalio are widely promoting investing in broad index ETFs. They place a major emphasis on low costs. Thanks to current technology, investing in these ETFs is very simple and time-saving. Want to know how I approach ETFs in my investing? How should one build a portfolio? Check out my Patreon, where I regularly post investing posts, calculators, analysis, and other valuable information. Now let's explain what is this ETF. It's publicly traded fund that contains a basket of assets like stocks, bonds, commodities or currencies. Unlike mutual funds, ETFs are traded on an exchange and can be bought or sold just like stocks. Very easy. ETFs are essentially funds that contain different assets. The world's largest and best known ETFs track major indices that track the performance of the US or European economy or sector, i.e. the technology, financial sector, energy, and so on. Since there are a huge number of ETF funds, retail investors have the opportunity to build their portfolio in any way they want at minimal cost. ETFs are mostly passively managed, but there are exceptions such as the actively managed Cathie Wood ARK Innovation Fund ETF. The fund still retains the option of the benefits of ETFs and adds a human component where the fund managers can influence which assets are bought and sold into the fund. Let's take a look at where the Cathie Wood Fund stands in these challenging times. As we can see, the fund has grown in a time of low interest rates and has been gaining in size. However, by the time 2022 rolled around, the Fed began to rise interest rates significantly due to high inflation. ARK Innovation, composed mainly of technology companies, began to literally fall. Let's move on. How to identify ETFs? Like stocks, ETF funds have a label. We have two ways. First, we can find them under so-called tickers. Second, we can use a specific ICIN, which is a code or series of numbers, if you like, to find an ETF. For example, the aforementioned Vanguard has ICIN 922908363. I enter the ticker VOO and it immediately gives me the ETF I'm looking for. Now I delete it and type in ICIN, which is the better way to search for ETFs. The ticker is easy for people to remember and can be associated with a specific exchange, whereas the ICIN is hard to remember, but again, it accurately identifies a specific ETF independent of the exchange. As I mentioned, ETFs can trade on multiple exchanges around the world. When you search for ETFs with your broker, they often offer ETFs in different currencies. You need to watch out for this. Personally, when choosing an ETF to trade, I look at liquidity, i.e. how many trades are made per day in the ETF. And this is critical. It may look complicated, but it just takes some practice. So now we know what ETFs are and how to find them in a trading platform. Now let's take a look at fees. With ETFs, there are annual management fees. Although they are not high, if we compare it with mutual funds, they need to be taken into account. That 1% a year can cut our overall profits by a quarter in the long run. If we can buy ETFs with low fees, we will have more money left in the long run. Logically, the best passive index ETFs, for example, have fees between 0.1 and 0.2% per year. Where can we find detailed information about the ETF we choose? If you are new to ETF investing and have several candidates to choose from, the best place to look is the fact sheet for that ETF. Here you will find an overview of the product, returns over various time periods, the fund's expense ratio TER, size, a list of the assets the fund holds and from which countries. And what about diversification? If we hold a broad index ETF, we can consider it diversified? Yes, simply because it holds the largest assets around the world. That is, it's diversified by sector, geopolitically, between assets and so on. The likelihood of all these areas ceasing to function is so slim that if such a thing were to happen, the world would collapse economically. Well, then we won't need the money, will we? History of ETF has expanded considerably in its short existence. There are almost 1,000 of them and more are being created almost every day. As of 2021, there were 8,551 registered ETFs. On the other hand, some ETFs are closing down and selling off their assets at market value, which they pay back to investors. The first ETF was created in 1993, called the SPDR, S&P 500 or SPDRs, and it's one of the largest ETF in the world that enjoys great popularity. The value of the asset invested in ETFs has increased every year. This can be seen in this chart, which shows the increase from 2005 to 2019. And that's all from today's introductory video on ETFs. Next time, we will take a look at the different types of ETFs to get a better understanding of them. And we will also discuss the ETF sorting tool. Thank you for watching, and if you like the video, please give it a like. Have a great day and invest wisely.